All right, welcome back. It's Friday, July the 12th. It is 7:42 a.m. All right, we're going to look at the trade that we talked about yesterday. After I made the video, I just placed a market entry. So there wasn't anything really to it. I just entered at the market, and here you can see the sellers or the bears began to overpower the buyers here after yesterday, and so we do have a decline in price. So what I'm going to do is I'll take this stop and I'll definitely move it down to reduce my risk. Maybe a little here. Now my limit is set right down here. However, a 2 day lead on this. I may move this down a little bit and try and bring my stop right in here somewhere. I mean, right now we're at support, so I mean theoretically I can go ahead and take the profits on this. That's not it wouldn't be a bad idea necessarily, but it would depend on your trading setup and your rules and stuff like that. Now, my rules, allow me to hold this trade. I think that's 120 pips in it. I think that's what it is. I'm still getting used to this platform, but I like to see 200 pips on a trade. Ideally, that's what I like to see. So I can take that and just move that down and limit some of the risk there. But we'll just see how this goes for now. I wanted to talk a little bit about how to find trades, okay? Because I haven't talked about that yet much. All right, so what we have here is a monthly chart, and so each one of these bars represent a month. And there you can see the 1 month there. All right, and I will look at this first to try and just see what I see. Basically, if I see blue bars, and I want to do trend following, that's a lot of what I try to do is trend following. Now, sometimes I do counter trend depending on what's going on. But when I see blue bars, I want to try to trade to the upside. When I see red bars, I want to try to trade to the downside. The reason is that the Forex is usually follows a trend for a while. It takes a while to turn around. Okay, so even when it's turning around, there'll be opportunities, you know, in the direction of the present trend, unless it just does like this right here. It's going up and then it just turns around and goes down. All right. But if you see something like this and you're trying to trade it to the upside, if you lose one, two, three times, then just give it a rest. Okay. I mean, at least I do. All right. And now here's a weekly, and I see a bunch of red bars here. Here on a monthly, I saw a red bar and a red bar. Now, I don't think that was a red yesterday, but so on the weekly you see a bunch of red bars here, and that just to me that just says that I've got a better chance of finding a winner to the downside than I do the upside, for the way that I trade. Okay, all right. So let's go ahead and look here at the 4 hour. All right, and yesterday you saw this come up in reverse after price rejection on this bar, and for me, I got in this trade a little bit late, but that was just where the market was at when I had saw it, and this was not too far outside of my normal risk. I could always make the trade smaller, which I did make the trade smaller just a little bit, and just went ahead and placed the entry here. I only looked at it once yesterday, And that's something that I had to learn how to do over time, was not to always be looking at my trade over and over again. Okay, that I mean, you just really burn yourself out by just always going back to the market and looking at it and seeing what it's doing, and just okay, wow, it's it's not winning, it's not winning. You need, oh wow, it's winning, and you come back, it's not winning. Oh no, but you just see yourself on an emotional roller coaster. So I just had to learn how to place my trade, set my stops, set my limits, and just let it ride. Okay. Now this is an obvious support area right in here, and you can see price has you know come to somewhat of a stop. I'm going to take a look at the hourly here. There was a little bit of pushback from the bulls here, but now the bears, they seem to be pushing the bulls back a little bit here. I mean, as you can see right here live, they're pushing it down into new lows here. But that's nothing to really get excited about. I mean, the market just goes back and forth, and it appears as if this is a new low for the month, I believe. Let's go back and look at the daily. Yeah, that looks like a new low for the month. So I mean, that's a good sign when you're in a short, is that you're making new lows for the month. But just remember that, I mean, this is all done in real time. Okay. Um, the What happens is the bears are pushing this down, and when the bulls see new lows like that, they think that that's a great price to buy at, and it's a new low price, so they're gonna start looking for support somewhere down here to try to buy in. Okay, and that's exactly what happens when you see price come down and do this right here and goes up. Okay, the bears have control of the market. They push it down. It comes into the old lows. The bulls was like, I made money here last time, so they'll start buying. Bears will see this. When they start seeing blue bars, many of them will take profits, and that causes the market to rise, because most of this right here is liquidation. Anytime you see, especially when you see the market move like this, a lot of that's liquidation. This is just liquidation. You, Guys that have longs, and they're liquidating those longs because there's been a buildup of shorts in the market in here, and when this price rises, they build up, and then the bulls take profits, and it causes the market to fall. And the same thing with a rising price. The bears have the people have jumped on this during the bulls liquidation, and when it gets down here, as the market starts doing this, people start getting out the market. They start taking their profits or trying to eliminate their losses, and it just makes the market rise, and it just does that all the time. I mean, the one thing that I had to try to learn not to do was not to try to predict what the market would do. Okay, just learning to observe the market and what it was doing, and make a trading decision based off of what it was doing at that time. Okay, you see a lot of gurus and stuff, trying to tell you, how to predict or forecast the market. I mean, I found that to be a waste of time after a few years of trading. It was not productive for me. What really worked was just plain old simple: observe the market, pay attention to support and resistance, and place your trades accordingly. Okay, now that takes a while to learn how to do. It took me a while to learn how to do. I would say it took at least 5 years to really learn what I was doing, trading the market. Okay, and it's about average. To get control of your emotions, and to learn how to place an entry, to learn what a good entry is, and what a bad entry is, and to learn how to place your stops, and money management. I mean, there's just a lot of stuff that you have to learn, and in getting a handle on your psychology. You know, that's a lot of the stuff that you have to learn. I mean, that's not all of it, but it's a lot of stuff that you have to learn. Okay, and trying to get rid of the noise out there and figure out who's really telling you the truth and who's just out there trying to make a buck off of new traders. You know, it can be really tough. So I try to give real help here from my own experience. These are my opinions on trading, and you can, if you find that they're useful, then thanks for watching. If you don't, then not, that's fine. All right. Well, that's it for today. I don't want to be too long-winded. I used to sit and watch Forex trading videos and just hours on end. I would advise that could be counterproductive to do that over a long period of time, just because you can get confused and burn out, and you just start making confused decisions. I mean, I know it caused me to do that. Okay. All right. Thanks for watching, and we will see you guys next time.